Shares of Tesla down 12% since reporting that big Q4 earnings miss the other day.
Dreadful assessment. Stock is lower by something like 7% in the pre-market.
The bears won, and it's hard to defend.
This was the most sobering outlook that I have seen from Tesla.
He's basically setting Tesla up to be taken over.
I can't stay quiet on Tesla stock any longer. It's been crashing and burning for a couple quarters now, and it's down by around 30% in the last month alone. And since Elon Musk seems to only be making things worse,
go yourself.
There's really only one question left to ask. Is Tesla still a good investment, or are their best days already in the rearview mirror? Your time is valuable, so let's get right into it. First things first, I'm not here to keep you hostage. Here's everything I'm going to talk about, and it's pretty cut and dry. I'll cover my near-term outlook for Tesla based on their most recent earnings call, my medium-term outlook based on Elon's increasingly unpredictable behavior, and my long-term outlook, which is based on full self-driving, Tesla Dojo, and the Optimus bot. And of course, whether I think Tesla stock is still a good investment as a result. But let me start by saying that this isn't a video about Tesla being bad, and I'm not rooting for them to fail. Over the last 3 years, I've made an entire playlist of videos talking about the incredible engineering inside their electric vehicles, their gigafactories, and their approach to full self-driving. But I can't stay quiet any longer about a few things that I think will be hard for Tesla investors to hear. And if you don't agree, that's fine. Leave me a comment. Just make sure that your point of view is based on facts and not feelings. And realize that I'm saying all of this as somebody who wants Tesla to keep winning. Alright, with that out of the way, let's get right into the earnings call. Tesla missed on both revenue and earnings per share. Total revenues for the quarter came in at just under $25.2 billion, which was 4% below analyst expectations and only up 3% year over year. And Tesla's total revenues for 2023 came in at just under $97 billion, which is about 19% higher year over year. Now, 19% is solid growth for top-line revenues, but it's nowhere near the 51% that Tesla grew by in 2022, or the 71% revenue growth they saw in 2021. Shout out to MainStreetData.com for making these numbers so easy to visualize. But revenues only tell one part of the story. Tesla's gross margins grew by 63% in 2020, 105% in 2021, and 53% in 2022. But in 2023, they actually shrank by over 15% year over year, marking the first time we've seen Tesla's margins compress in around half a decade. That's because even though Tesla delivered a record 1.8 million vehicles in 2023, they had to aggressively slash their prices on the Model 3 and the Model Y to achieve those numbers. And when you combine that with Tesla's new CFO saying that he expects growth in vehicle production volume to be notably lower for 2024, it doesn't take much for investors to start connecting the dots. Slower production growth and lower margins with no clear end in sight for these price cuts is not the message that any of us were hoping for. I should also point out that this wasn't Tesla's first terrible earnings call.
I mean, if you looked up disaster in the dictionary, there'd be a video of last night's conference call. And I think the problem is that the street wanted to get details. Have the price cuts ended? Where does the gross margin outlook look? What does demand ultimately look into 2024? And instead, it was really Musk put on his macroeconomist sort of hat, and that's not what the street wanted. I think the big issue was really around the price cuts. And also, by losing your CFO, that was, I think, a huge part of the credibility. Investors came off that call, and I can tell you, institutionally speaking, just a lot more questions, no answers.
Where was the operating margin? 7.6%, I think, came in. How does that... That's like closer to other automakers, right?
I thought Musk would have put the line in the sand, maybe a few more price cuts, then we're over. But I would put last night as a top 3, probably worst conference call I've heard from Elon.
See what I mean? That clip was from right after Tesla's Q3 earnings call a few months ago, but it applies perfectly to this most recent one, and the one before that, and the one before that. And in my opinion, this is becoming a much larger pattern for what many investors think is the best business in the world. But there's another energy business you should know about, and that's Climatize, the sponsor of this video. Climatize connects investors to solar projects across the US in need of capital, and projects on Climatize can return up to 10% annually.
Using Climatize is like loaning someone money for a home mortgage, but instead of it being a home, it's a solar project. And instead of a homeowner, it's a business, a school, or a community.
That's Will Wiseman, the CEO of Climatize. And Climatize is pretty simple. They use their network of vetted solar installers and developers to find great projects looking to raise capital. And as that capital gets repaid, investors can earn returns, up to 10% annually, while banks, T-bills, and CDs are only offering 5%.
Investing in solar energy is actually a lot like investing in real estate. A real estate investment produces cash flow through rent payments. Solar energy projects produce cost savings for the underlying business and communities, anywhere from 8 to 10% per year, and they can generate cash flow through the sale of that power. Climatize allows you to fund these projects and capture some of that value as an investor.
So if you want to invest in US solar projects and earn up to 10% annually, head over to climatize.earth/TSYOU or click my link in the description below. By the way, the minimum on Climatize is just $10, and right now, Climatize is offering my viewers their first $10 to invest for free by using my referral code TSYOU1. Alright, so Tesla is developing a pattern of disappointing earnings calls that aren't addressing the key issues. That's why I'm not buying Tesla stock in the near term, at least not at these prices. I want to make it clear that I'm not saying that Tesla is a bad company. Far from it. But the opportunity cost of holding Tesla stock seems really high to me right now. There are many other great companies out there capitalizing on AI and at much higher margins. So what I'm looking for in the near term is a clear sign that Tesla can meaningfully improve their margins, grow their production volume, and honestly change Elon Musk's behavior. So let's talk about that next.
You don't want them to advertise?
No.
What do you mean?
If somebody's going to try to blackmail me with advertising, blackmail me with money, go f yourself.
But
Go f yourself. Is that clear? I hope it is.
Look, personally, I'm not offended by a few curse words. And what's even more frustrating is that I agree with what he's saying about media companies being held hostage by advertisers and their budgets. But this is still the CEO of Tesla, in public, clearly acting with poor judgment. And speaking of poor judgment,
just humor me. Can you imagine Jensen Huang coming on air and saying he needs 5 times his current holdings if he's going to do some super duper generative AI? I mean, can you imagine that? Pure hubris, which is why Tesla might be the first to exit the 7.
I can't believe I'm saying this, but I agree with Jim Cramer on this one. Ugh. The words even taste bad. If you don't know what Cramer's talking about, Elon Musk recently said that he's uncomfortable growing Tesla to be a leader in AI and robotics without having at least 25% voting control of the company, which is about twice as much as his current 13% stake. In my opinion, Elon Musk just made an existential threat against Tesla. I honestly don't see how anyone could take it any other way or why anyone would buy this stock until this issue gets resolved. And we shouldn't just blindly support Elon here, because there are massive problems with his line of reasoning. First, Elon Musk owned and controlled 22% of Tesla not too long ago. That is, until he sold over $20 billion worth of his Tesla stock to help finance his purchase of Twitter, which ended up costing $44 billion. And it's not hard to see how salty he is about it, because Twitter is currently worth way less than half of what he paid for it. That's not a guess, by the way, that's the number based on the share value that Twitter employees are getting compensated at. I can't imagine why.
Go f yourself. Is that clear?
The second problem is that Elon is constantly undermining the position that Tesla is currently in, which is a pretty bad look coming from its CEO. Tesla is not a startup anymore, much less a dozen of them. Don't get me wrong, it's awesome that Tesla still has a startup culture 20 years after Elon joined the company. But just a few quarters ago, Tesla was worth over $1 trillion with a capital T. Tesla's stock is currently in the Magnificent 7, and at the time of this recording, it's still in the top 10 positions of both the S&P 500 and the Nasdaq. And in 2023, Tesla manufactured and sold more than half of all electric vehicles in the US. And there's no doubt that all of these massive achievements are because of the company culture that Elon Musk has cultivated. But let's not pretend that every mega cap company doesn't have a big portfolio of startup-sized business units inside them, many of which I cover right here on this channel. Alright, the third and by far most egregious problem with Elon not wanting to do his job unless shareholders pay him back for buying Twitter, unless he has 25% voting control, is that's the entire reason to buy Tesla stock in the first place. Look, I get it. You're probably frustrated with a lot of the things that I'm saying in this video, and in case it isn't clear, I'm frustrated by them too. But just humor me. Let's take a look at Elon's tweet objectively, as shareholders of his publicly traded company. I am uncomfortable growing Tesla to be a leader in AI and robotics without having around 25% voting control, enough to be influential, but not so much that I can't be overturned. Unless that is the case, I would prefer to build products outside of Tesla. In my opinion, this is a threat to Tesla's entire existence, because the main reason to invest in Tesla is the belief that they are already a leader in AI and robotics, and that Tesla is using that leadership position to create shareholder value through AI and robotics to the best of its ability today. For example, Tesla shareholders tolerate the price cuts and low margins that I mentioned earlier because we expect the high-margin, full self-driving software to make up for it in the future. Tesla shareholders understand that investments in Dojo and their supercomputing infrastructure are long shots, but we support them anyway because NVIDIA's GPUs are in short supply, and Tesla can build great chips of their own, which kills two birds with one stone. And we're all excited for the next generation of Tesla's robotic platforms, whether that's their $25,000 robotaxi or Optimus, which Elon Musk says will one day be bigger than all the cars.
So then we basically just need to design the specialized actuators and sensors that are needed for a humanoid robot. People have no idea. This is going to be bigger than the car.
Without AI and robotics, Tesla is just another car company. So, in my opinion, when the richest and arguably most influential man in the world says he doesn't feel comfortable doing these things unless he gets more stock and more influence, it's hard to see it as anything but a power grab. And in my opinion, if Elon Musk has no trouble selling over $20 billion worth of Tesla stock to buy Twitter, he should also have no trouble selling some of his Twitter stock, or his SpaceX stock, or whatever else to feel comfortable growing Tesla to be a leader in AI and robotics, if that's still a high priority for him.
Can you imagine Jensen Huang coming on air and saying he needs 5 times his current holdings if he's going to do some super-duper generative AI? I mean, can you imagine that? Pure hubris.
Ask yourself, if the CEO of any other company acted like this, would you still invest in it? And that brings me to my long-term outlook for Tesla, which honestly hasn't changed much. I'm still really bullish on Tesla's long-term future because I really do believe that it's already one of the best AI and robotics companies on the planet. And a big reason for that is how Elon Musk and Tesla's engineers turned technical challenges into huge competitive advantages. They were wise enough to put cameras in very early models of their cars and start collecting billions of miles of driving data before anyone else. And then they used that data to train an AI that's so good that they don't need expensive sensors like LiDAR or radar at all. They used first principles to reinvent how people, parts, and cars flow through their factories, and made big bets on new manufacturing technologies like using a gigapress to stamp out entire sections of cars instead of welding and gluing together hundreds of different parts.
But I think also for long-term competitiveness, eventually every car company will have long-range electric cars. Eventually every company will have autonomy, I think, but not every company will be great at manufacturing. Tesla will be absolutely head and shoulders above anyone else in manufacturing. That is our goal.
And when Tesla couldn't get enough GPUs from NVIDIA, they built their own custom chips. Even though Project Dojo is a long shot, the fact that Tesla can build literally everything they need to achieve their mission makes them one of the most resilient companies on the planet. And sure, there are speed bumps here and there, like the Cybertruck being delayed by more than 2 years because of how hard it is to manufacture, or switching to an entirely different approach to full self-driving between version 11 and 12 of their FSD software. But when you're doing so many things that no one else has done before in an industry that hasn't changed in decades, you're bound to hit obstacles that no one has overcome before you. All of these innovations and more are what separates Tesla from normal car companies. The only thing that would change my long-term outlook on Tesla is Elon Musk, for all the reasons I just talked about. Alright, we covered a lot of ground, but I wanted to be thorough, since there are so many different aspects to both Tesla and Elon Musk. And I know I'm saying things that aren't pleasant to hear, but I respect Elon Musk enough to take the things he says seriously, and I do think we need to talk about them, especially as investors who want to see this company thrive for years to come. So with all that context, let's talk about whether or not I think Tesla stock is still a good investment. And if you feel I've earned it, consider hitting the like button and subscribing to the channel. That really helps me out, and it lets me know to put out more commentary like this. Thanks, and with that out of the way, here's my honest thoughts on Tesla stock. I'm not selling any shares right now, but I'm not buying any more Tesla stock until I know that it will still be the AI and robotics company that I thought I was already invested in. The opportunity cost is just too high. Even if Tesla stock goes back up by 30% from here, that just brings it back to the price it was at 1 month ago, while almost every other AI software and hardware company that I cover has been absolutely ripping. I honestly don't care that Elon Musk bought Twitter or what he does with it, but that shouldn't be paid for by Tesla investors. And I personally don't mind his behavior during interviews or on Twitter, until it starts taking away from what I think are two of the most important missions on the planet: making humanity a multiplanetary species with SpaceX, and accelerating the world's transition to sustainable energy with Tesla. Like I always say, it's important to understand the science behind the stocks, and I really hope that Elon doesn't take that science away from Tesla and make it just another car company. And if he does, well,
go yourself. Is that clear?
Thanks for watching, and until next time, this is ticker symbol U. My name is Alex, reminding you that the best investment you can make is in you.